Lance, appreciate you hopping on today. Um, it's good to
Yeah.
bring these conversations to light for everyone to hear. So, I guess we'll just start off. What are you seeing? What's exciting you in the space? The sports.
Oh
It's
man,
every day. It's cool to be in. Yeah.
hopping right into it. Yeah.
Yeah.
No, thanks for having me on. A big fan of what you're building. So it's a pleasure to be here. You know, I I think there's just so much happening right now. As you and I have talked about, from startups in the space to team investments to you know emerging leagues. It just seems like there's so much interest right now. One, from like a fan perspective. I mean, we're seeing that with women's sports, and we can hop into that. I was just at the um, Red Stars game at Wrigley. I think it was a record crowd for NWSL. Pretty awesome. And it seems like from an investment perspective, there's just a ton of institutional interest, right? If you look at Arctos, raised a massive fund to go after their strategy with franchises, but also doing some growth investing out of that. Um, you've got like other venture groups kind of, I think, putting more capital into the space, and some family offices actually that are starting to spin up some dedicated focus on these areas. So I think, just broadly speaking, it seems like is a really interesting time for sports and sports adjacent. And we can hop into this, but like, we've evolved a little bit for how we think about stuff that we want to invest in. Uh, and I personally kind of see sports as an amazing wedge to a lot of adjacent markets. So I'm spending a lot of time sports broadly, of course, then in the collectible space, and then kind of what we're kind of calling healthy living ish, which touches sports. So starting with human performance, but looking at active lifestyle, outdoor recreation, longevity, not to use a buzzword, but so those spaces, all three of those, I think, are just really, really intriguing right
And so
now.
when you look at a new space,
Hmm.
how are you going about learning? I think that's always the
Yeah.
toughest thing of like, okay, you've done sports, you feel like you know it, and then now, okay, let's add healthy living. Or
Yeah.
think it's, what does that process look like?
Yeah. It's a great question. I think first, make sure you're reading Profluence, right? Uh, and some other good ones out there. Um, I think in general, I see sports as something that touches so much stuff. Uh, like I said before, like sports, a broad way to think about it for us is like, of course, we're going to do some very sports centric opportunities, but then we see sports as a wedge, sports as an amplifier, sports as a use case, um, to a lot of these adjacent markets. So we've always been kind of interested in these adjacent opportunities. And historically, I think we would dive deep into something when we saw something interesting, either through a partner, or met an entrepreneur, and then we would start to spend time there. I think we're getting a little bit better, taking a more like proactive approach with these sectors. But in general, I think we try to meet with a lot of people, be it founders, be it industry executives, be it athletes, just to you know get a better sense of what people that are in the day to day in these particular segments are thinking about, and then we kind of try to wrap some sort of thought around, okay, like what might be interesting. So, for example, in the collectible space, I met a company here in Chicago about this time last year called Ludix. Incredible group of people, and they're in the sports card or just the card space, building kind of like a suite of tools to help you be a better collector, starting with a card scanner. And so I went and got my shoebox from like
Mhm.
20 plus years ago of cards. Basketball, I was a huge basketball fan. Collected Jordan a little bit. Was on the Jerry Stackhouse train, which didn't really pan out. And then Hakeem Olajuwon for whatever reason, and started scanning these cards, and it shows you, hey, this is what the card is, and here's here's likely what it might be worth if you look at like recent transactions on eBay. I was like, wow, this is really interesting. And I get sort of the excitement around it. Like when you scan a card, it's like, wow, this could be worth X, Y, and Z. You're like, oh man, I gotta go figure. So I went down an absolute rabbit hole, spent way too much money on Whatnot, on Fanatics Live, on like getting cards graded at PSA, on eBay. And like that's an example where like I just thought like the space was pretty interesting in the physical side, and we can talk more about this, and just decided like I think just from a personal interest, just started diving down into everything, talking to collectors, talking to companies, talking to investors. Um, and so that's now a focus of mine is like the collectible space in general from an investment perspective. And frankly, like it kind of is a good example of like sports as a wedge, right? Like there are a lot of sports related collectibles, from cards to memorabilia. But then if you look at some larger opportunities in, non-sports related collectibles, and, you start to touch, comics, video games, luxury, pop culture, Pokemon, of course, like, and it just gets really big really quickly. And I think there's a lot of opportunity in that space. So that's kind of an example of how kind of
Hmm.
met a company, was intrigued by the category, and then started to talk to as much as like, as many people as we could, started to read as much as we can. And then over time, hopefully have some insights. But again, I think leaning on these founders and entrepreneurs that are building businesses day in and day out to like lead us to what could be pretty intriguing.
And are you finding a balance right now of the in person versus digital? And what are you seeing success on one side? I mean, I'm just even curious now from your lens when you're looking at a company, if there's certain things that work better for companies. Is it like when they get in front of you? Is there a certain
Yeah,
cadence? Like I think we're in this weird now where it was all digital and now we're
right.
sort of back to half, but it's an interesting time for both sides.
Yeah, I mean, I think like just from like engaging with companies and founders, like I think digital like continues to make it a lot a lot easier to kind of have an initial conversation with someone, and like a video chat. I think at least for me, is still like really valuable. Now, like we love to meet people in person when it's convenient and makes sense, but um, I think you can just talk to a lot more people,
Right.
when you're doing it like this. So for me, I think it's a personal preference. Like I don't like I love doing the virtual stuff, and if things start to like take off, then finding opportunities to get together in person. We also try to be at various events and stuff
Mhm.
like that. There's just so many now. It's like hard to figure out where to
Yeah,
be,
yeah,
to be honest.
yeah. That's
But
true. I was just curious because even from our side, and it might be different from a company versus a vehicle, but almost all of ours has been succeeded in person and
yeah,
very little digitally. Whereas us, most of the companies we've went into, we've done digitally, and so it's
yeah,
just interesting. I was curious if on your side we're seeing you're right. There are definitely way too many events. Speaking of the founders, I know we talked about some of the areas that are interesting to you. It seems like there's a lot more people from other industries, call them tech people,
mm,
whatever, coming to build companies in sports. Are you seeing that as well? Are what's sort of the thought process around that or why it's happening? But for
yeah,
me, it feels like there's always someone with a new idea that's done something cool in another industry.
yeah. I think like maybe it's just kind of like very recent for me. Like I think one of the like mantras we think about what makes sports interesting, and also some other adjacent markets pretty intriguing, is this concept of an avid, passionate consumer or fan. Like fandom is how we talk about it in sports, but um, there are other verticals. Like even we talked about stuff like active lifestyle or longevity. There's people that are like super fans of that category and how they lead their lives. And so like I think I don't know if you want to call them hobbyists or like what phrase you want to use, but this concept of like passionate used user bases being a core ingredient of like some of the categories that we spend time in. And I think people just end up at some point being like, okay, I love this space. Like I have this great experience from, the tech world. Um, let me go build in a space I love and like and have a passion for, and leverage kind of all the experience that I have on, like, the product side, the tech side, the marketing side, to build something. So I was talking with a founder yesterday who's actually like doing this in the collectible space. He's been a long time collector, but he spent most of his professional career kind of in the tech world, and like the combination of those two things makes it really interesting for what he wants to build. And so, yeah, I think you're seeing that more and more now, where people are taking their skill sets and being like, okay, I have this other interest where I've spent time, I have an insight, um, I have a network just from what I've been doing, personally. How do I go leverage both of these like efforts that I've been spending time on into building something or being a part of building something? So, yeah, I'm seeing that a bit more. And I find it really intriguing personally as well.
And there's, I mean, you do a pretty good job on everything. You're pretty visible, so I'm sure you personally, or through the firm, you see a lot of. You probably see, I don't know what, 15, 20 new decks a day or something. I'm sure you see a lot. What are some things that catch your eye? I'm always curious of like how your emotional levers work,
Yeah.
and because the game is so much, it's not, especially digitally, at least I feel it's a lot of storytelling and narrative and creating some sort of, there's a lot of cool ideas, but like, there's only so much time in a day.
Yeah.
What are some ways to at least optimize at least getting a first call? Because honestly, that's usually the hardest part. If you get a first call, the second call is better chance than even the first one.
Yeah. I mean, it's so hard. Gosh. I find myself intrigued by just so many things. And like I love hearing the stories about what someone's building. I love kind of riffing on their vision about the future. But yeah, time is very limited. It's super hard, especially when you're thinking about, maintaining relationships with LPs, building relationships with advisors or kind of industry executives, working with existing portfolio companies, and then finding the time to look at new stuff. It's for everyone, it's like really hard. So I think like where I'm maybe trending more and more now, for how I think about at least early stage stuff, and we can talk more about this too. I think, working on a strategy where we can go and be a bit more opportunistic across these sectors we're focused on, kind of beyond, early venture. From a fund perspective, we focus mainly on seed to early Series A, and so in that category, like I don't know if you know who Mike Maples is, but he runs a firm called Floodgate, and I just love the way he thinks about startups, kind of at the pre-product market fit stage. And so I've tried to adopt some of that stuff. Again, it's like really hard to put in practice, but I think the stuff that gets me most interested about something is when like an opportunity feels like new or unique or an insight that's different than what I've heard before, or there's a perspective that feels differentiated, or there's like a structural advantage that like the founding team has. And all that is a bit like qualitative, and every deal looks different. But I think the things that I end up getting most interested in is when I'm like, okay, wow, this is kind of different than what I've seen in like, the past 6 to 12 months. Or like, wow, this team has clearly a unique advantage that is a little bit different from what some of the other companies have shown, that have come across. So I would say like that is like probably the first thing where that gets me excited about an opportunity. And then I think more specifically on the venture side, where we typically like to invest, or where I like to invest within our firm, is like maybe what you would call post product, but pre product market fit. So hey, there's something in market, product or service, and they have some customers, or they, you know, have some eyeballs, and but clearly you don't know if like it's working yet. Something may be working, but you're just not sure. Like I think that spectrum is where like we like to potentially invest, just given where valuations can be in that. And kind of the thing that we're looking for there is like how are the founders thinking about testing a lot of these hypotheses? Again, this isn't too different from some of the other like seed stage funds, but how the founders are like testing these hypotheses, how they're getting insights from the consumer to truly understand what they want, and then aren't necessarily wedded to the product vision and are kind of adapting the product basically to solve what they're finding is most interesting to this like again passionate user base, at least initially. um, so those are the two main things I think at the earliest stages that I get most excited about when those are coming together. And then, we look to a certain extent at the market opportunity, but frankly, at the seed stage, who knows what that's going to look like in like the end. Like
Right.
I think you have to be at least somewhat convinced that there's a large opportunity there. But man, some of the biggest companies in the world looked like they didn't really have like a massive TAM at the seed stage.
Right.
So those are some thoughts, I guess.
Yeah. And what about geography wise? Like, do you evaluate differently versus, a US or what's called North America
Yeah.
company versus something in Australia or Europe or
Yeah.
wherever?
Our main focus when we're thinking about leading or co-leading a deal is North America. We have done a couple investments like across the pond outside the States, like outside of North America. I would say those are fewer and far between. Although like kind of one approach we like is co-investing with an investor in that region that is either leading or co-leading the deal and has sort of boots on the ground to better understand, that part of the world. And if we can be additive to the company's vision for doing stuff in the States or whatever, then that's great. I think we just tend to like to be a little bit more involved just from a communication standpoint with the teams that we invest in, and so it just makes it a little bit easier, if you're kind of on the same time zone. And we feel like we can be a little bit more helpful on stuff that's in North America, just given our network here. But are definitely looking at opportunities. I would just say it's not necessarily a core focus outside the States, but we talk to a lot, and we talk to a lot of partners that we would like to do something with. Um, but it's not necessarily like a mandate to go invest in XYZ parts of the world. Yeah.
Right. And then from, having gone through how long you been? 5 years, 7 years,
Yeah. Like 6 years, I think. Yeah.
6 years.
Crazy.
I'm sure you've seen some companies really explode. Obviously, some exits in there. Any certain typical characteristics or things you've seen of why some of those companies have gone like this versus why some have sort of flatlined or just fell off.
Yeah. I mean, shoot. I think they're all different. I think one thing,
Even if you have
yeah,
some
I
examples,
think
yeah.
one thing that comes to mind, again, I don't know exactly how you evaluate this early on, but I think one thing that comes to mind in our companies that are doing well is just kind of a relentlessness of the founders. Like they're just accomplishing things. They're just getting things done. Like, they run into like a little bit of a wall and they're like, all right, I got to figure this out. And somehow they figure this out. I think a good example is Status Pro, which I think you're familiar with, Troy
Yeah,
Jones.
we had Troy
Yeah.
on.
And Hawk, like I mean, we led the seed round. We like co-led that with Titletown. There are a lot of other great firms and groups in that. And there were various challenges that they knew going in, and somehow they're just making it happen. They're just accomplishing it, and it's just amazing to watch. It's like a privilege to be a part of. And I think the other thing maybe that we've seen is that these teams do a pretty good job of like building the team. So like talent, I think, is just huge. And again, I don't know exactly how you assess that. You can get a feel for it through a bunch of conversations and so on, but I feel like you only really start to see it once you start working with the companies. So those are things I think, there are a few other companies as well where they've just found ways to keep going, and that that has just been sort of one of the consistent things. I think the other thing that I would say is like they seem to have a really, really, really strong sense of, at least initially, back to what I talked about before, what some of their customers or users are saying. Like it may not mean that they're ultimately successful, but they seem to be pretty close to kind of the target market they're going after. So those are the few things I'd say.
Mm-hmm. That's interesting.
Yeah.
From a, and that'll take us down too long on
Oh
another rabbit
gosh.
hole. From a, I'm just going to bucket a lot in here though. From an, we'll just call it like emerging leagues, women's
Yeah.
sports, global shoot off leagues, right? Even Saudi Arabia today is talking about launching a boxing
Wow.
league. And what's the thought on that? Because obviously that's a, I don't want to say a fairly new concept. I mean, people have been launching leagues forever, but it seems like there's a much greater influx now than ever before. And I know you
Yeah.
guys, at least three ice, you might have some
Right.
other ones. How you look at the space and what you're seeing or thinking about
Yeah.
it as.
Yeah. I'd love to hear your thoughts here too. I mean, I think like it is again just going back to the fandom piece. Like people are looking for ways to engage with sports in fun, exciting, different formats, and so there's something there. Like, I mean, I remember growing up huge into basketball, like the And One mixtapes. Like there wasn't really a league. I mean, it was a league like Rucker, you know. Um,
Mm-hmm.
that stuff was so awesome. I remember going to Rucker Park and seeing it for real, and like it was just so. And that was like a whole different. Like they built an entertainment piece around that. Personalities, everything was awesome. And so I think like that's just an example of like people continue to want these new things. So we're very like I'm very intrigued in these opportunities. I think the challenge that we found as a venture fund of our size is the math like gets a little challenging from the traditional metrics for how you think about a startup like exit opportunity. Like can it return the fund? Can it be big enough for X, Y, or Z? Can you get enough ownership? Is it going to be capital efficient? Yada yada yada. Like not saying that those are the perfect ways to think about portfolio construction or how you build a venture fund, but um, there are some ways to think about just it. And I think with some of the league stuff, and I think you've seen this in some of the leagues that have started, like, um, yeah, it typically takes longer than usual. It normally takes a bit more capital than expected, and um, TBD on the size of these things. Now, granted, some of the more professional leagues, right? Like, you know, is NWSL going the way that MLS went? Maybe, right? But I think like some of the emerging stuff I find super fascinating. I think we just had a hard time figuring out how it fits within our mandate from a venture fund perspective. But I think there's a real interesting opportunity. You're already seeing this of people finding ways to like invest in various types of emerging leagues, find synergies across them, cross sell fans, media rights as well. And there could be like a really thoughtful strategy that's like some are doing this. Like we're going to invest primarily in emerging leagues and technologies that support them and, think about the risk return a little bit differently than how you might do on just a one off early stage startup deal.
Right. Right. Yeah. The one thing I will add to that, what I find interesting is what at least made them harder, meaning the leagues, was there was no infrastructure at the
Mm-hmm.
back end from a acquirer standpoint. So you didn't have like the NBA to me is a real potential acquirer of something like unrivaled 3-on-3 women's
Yeah.
basketball or Ice Cube's the big three or now Saudi Arabia or these wealth funds are potential, buyers. Even if you look at just even Arctos, what you brought up, like, is there a world if you can have enough of the assets that equal something they would normally do as
Right.
just one? So if they're going to buy 10% of an NBA team, well, can you build enough of an emerging portfolio where that as one is about equal to, 10% of an NBA
Yeah.
team? So I think there wasn't that infrastructure before, which is there and only growing day by day. but I do agree. There's the leagues they're
Yeah.
tough from a lot of
Yeah,
different
I think too,
standpoints.
if you even had like investment horizon, which you don't have to be, I guess, beholden to a particular exit within a certain number of years, and you can let the like if these leagues are successful, get to a point where they're just cash flowing assets, while they're also accruing some equity value. Like I think that's a really great approach too. It's just like sometimes like it's not a perfect fit for a lot of traditional funds. But I like the Arctos idea. Yeah, if you can, build a big enough portfolio for an asset manager to get a piece of, like that's pretty interesting.
Hmm. And then something else I had another point on that.
Next
I don't know.
time.
It's
Yeah.
slipping my mind. But yeah, next time. So I guess I know you talked about some of the other areas. Are there any like we'll just go like the
Mm.
AI. I'm sure at least like half the decks probably have some form of
Yeah.
AI now. Like how do you approach that? Is that a pro? Is it a con? Like how do you really evaluate what is true AI versus what's just jargon to tell
Yeah.
the story? And how are you guys looking at that? Because obviously
Yeah. Yeah.
that's the hot cycle right now. See how
Yeah.
long it
Yeah.
lasts.
Like I think I mean, we're still trying to figure it out, transparently. And maybe this is an easy answer. Like the most of the time, and we thought about this with other sort of, technologies that we thought were pretty interesting, be it Web3 or whatnot. But we tend to, at least in the verticals where we're spending most of our time, want to see a business that is a good business on itself. And now, like, these technologies are super enabling new opportunities, either on the business model side of the house or the way that they, or like the cost structure or the way that they're adding new features or experiences using some of these technologies versus like we're not going to be in like an infrastructure layer investor in that stuff, but absolutely like we're thinking about okay, how does AI or again I'm still like a Web3 fan, but like how do those end up like accelerating some of the trends in the sports space, in the collectible space, in the like healthy living space on businesses that we think are already interesting or could be interesting. So, yeah, I mean, you're seeing it a lot now. I was talking with a company yesterday, or like a firm yesterday that is looking at like kind of things that would otherwise have been just products or like a feature within a business, like an AI tool or something, but is actually accelerating internally, like the development of other things and how they can roll that out across other types of companies. And so I thought that was, pretty interesting. But I wouldn't say like we're trying to rush at the AI like gold mine. I think we're probably behind. If that's what we're trying to do is like compete with everyone's that's trying to get into an AI company. But it's something we're talking about with our existing companies, and it's something that we're definitely trying to understand when it's a part of a pitch as to, okay, like how does this meaningfully change either the product, the platform, the go to
Right.
market, et cetera. So that's kind of like our learnings there and like how we continue to learn. Yeah. Well, what
Hmm.
about you guys? Like, how do you think about that?
Uh, I think if you wanted to have real AI winners, you would have been in them
Yeah,
5 to 7 years ago.
totally.
A lot of them, and I think you gotta. I mean, just what OpenAI has done in ChatGPT, like people are building cool little things now, but are they gonna get swallowed up by a behemoth that can easily add
Right.
things? So it's like how unique is yours? And so to me, a lot of the hardware companies actually stand to benefit the most if they can just
Right.
integrate AI. If you can build a software that they all use, maybe. Curious on the sports tech front because you're obviously a little adjacent now. People wanting to build like true
Yeah.
sports tech. How do you look at that from a
Right.
market size and if you're building, a baseball bat technology or
Yeah.
whatever it
This
is.
probably gets into like kind of a strategy that I've been noodling on a little bit, like not something super uh, unique, but for whatever reason, like I'm fine with like pretty niche opportunities, or what appear to be niche. I mean, the stuff that I like the most, not the most, but stuff I do really like is stuff where it like appears to be niche, but actually has the potential to be pretty large. And so, like the baseball bat company example could be interesting. I think for me, though, it's probably not something I get super excited about at the earliest stages where we typically invest. Like I said before, I'm kind of looking for something that is less of a, improvement upon something existing, but more feels like a new experience or a new insight or a new model. However, I love the idea of like having the ability to invest in those other types of companies, like the baseball bat one, for example, later stage when it feels like they're starting to break out, like in where maybe some other risk has been mitigated on certain aspects, and now, and maybe you're paying a bit more from a valuation perspective, but it's a different risk return model. So like I would love, and like I think you'll start to see this, like we'll start to do this a little bit opportunistically, is you know looking at and investing in opportunities that are maybe a little bit beyond where we typically do it because we like the company, but we weren't willing to take the earliest stage risk. And now, but we've stayed in touch. We like how they progressed. We've been able to be like helpful in some sorts, making an intro here or there, being thoughtful about something. And then now we're getting an opportunity to invest a later stage where some of the concerns we had are somewhat mitigated. But there's a different, like, they don't necessarily have to be as big of a winner as they do for some of the stuff that we would look at much more earlier stage. So I would love to get to a point where we're like, and I'm thinking about this now, where I'm vertically focused in these categories,
Right.
sports, collectibles, and call it healthy living, but sort of flexible across stage, frankly, and sort of like risk capital. Um, and then I think that's super synergistic as well, right? Like if you're investing in companies that are later stage, or you're investing in
Mm-hmm.
franchises, or you're investing in um, emerging leagues, and you're also investing in, the tech companies around it, or the mature, smaller private equity like there's so much knowledge sharing, there's so much insight that happens across, I think, that ecosystem that it could be somewhat of a differentiator as an investor, I think. But still a lot of wood to chop on that strategy. Yeah.
Mm-hmm. I think part of what you're saying is optimistic to just a lot of people within the sports ecosystem because you see there's so much more growth from the investing side, the building side, the operate, wherever it fits. There's so much more, and it's only going to increase as you have more leagues, as you have more teams, as you have more talented
Yeah.
people. I guess I mean we could talk all day, and we can always run these back. So anything else interesting or you want to touch on, and then we'll sort of
Anything
wrap it
else
up from there. So
interesting?
giving you a spot. If there's
Yeah.
nothing, we'll just
No, yeah. I mean, people that are building in the sports space, in the collectible space, in the healthy living space, we're always looking to build relationships there. I think about this from a 10, 20, 30 year horizon. Like even if something is not a great fit now, I think this, business is really about building trusted relationships with people. And then when an awesome opportunity arises and there's a good fit on both sides, like, being able to support that team with capital and and like some strategy, like I think is how we want to approach the investing landscape versus just thinking about it as like, hey, we need to invest just here, just now, et cetera. Like you said, the challenge is just finding the time. So, you know, would love to meet people.
cool.
Yeah.
Yeah,
Yeah.
what
Yeah. I
kbpartners.com is
mean,
that
shoot, my like email is on
website?
my LinkedIn, Lance at kbpartners.com. I'm like half active on Twitter. And then, so yeah, like feel free to reach out, and like, we're trying to do a better job too of like, we've like grown the team a little bit. And so even if it's maybe not a perfect fit for me at the time, like I'll loop in a colleague, right? And so always trying to meet people, always trying to better understand like these markets, and always trying to figure out the time management piece as you alluded to. So yeah,
I love it. Awesome. We'll put your email
that's great.
in the post
Yeah,
as
of
well if
course.
you're cool with that. Awesome.